Hey everybody, welcome to my very first Facebook Live on real estate investing. It seems kind of weird because I'm used to doing seminars in front of a live studio audience, so this is a little bit different, but it's all good. Just something that I'll have to get used to, and I'm going to give you as much value as I can. So again, today's live is going to be about real estate investing. This is going to be live on Facebook. It'll also eventually make it to YouTube. So whether you're watching it on Facebook or YouTube, show me some love with a heart or a like. Give me a thumbs up if it's on YouTube, and if you like the video, which I'm sure you will, and also give me a hashtag live or hashtag replay to let me know if you caught it live on the replay. Most people will catch it on the replay. I understand that, but nonetheless, it's still good to know who's out there live and who's out there on the replay. Also, it's interactive, right? Obviously, that's why it's live. So I've got a topic that I'm going to cover today, but you can feel free to ask questions, and I will get to those questions that you ask, and whether you're watching it live or on the replay. So I will respond to everybody's questions. I will respond to everybody's comments. So also show me some love in the comments if you like it. Tell me what your main takeaway from the video was. All right. So I'm all about trying to empower people, and that's what gets me up out of bed in the morning, is so that I can have a positive impact on other people's lives, and especially in the area of financial empowerment. All right. So now today's hey Sydney, what's up, man? So actually, see Sydney's out there, and actually this question that I'm going to be dealing with today is a question from a friend and student of mine, 𝗙𝗵_𝗏𝗏, and I'm sure he won't mind me giving him a shout out. So, and my number one question about real estate is how to get funding with no personal guarantee or credit. All right. So this is a subject that's very near and dear to my heart, since I teach people how to buy property without cash and without credit. All right, so let's look at the way that most people buy property, or let's look at how most people buy property, right? So people that are going to invest in real estate, they're considering bank loans, all right? They're considering hard money loans or construction loans or business credit, all right? So for those of you who don't know all of those terms, obviously everybody knows what a bank loan is, right? You go to the bank and you apply. All right, hard money loan tends to be a rehab type of loan that people are going to get to buy and fix up the property. All right, construction loan is similar to that. All right, and then there's business credit. So I have a feeling that Sydney's question may have kind of touched on business credit, so I'll talk about that briefly as well. But basically, any of these types of loans, typically the bank's going to require you to have good credit, right? Got to have great credit, right? So that knocks a lot of people out of the water for a lot of reasons. All right, you got to have a down payment, and it's usually a sizable down payment. You have to have sufficient income, right? They got a debt to income ratio, so if you make so much money, you can't have so much debt, right? So that's another problem. And then you got to have a personal guarantee. So that's one of the elements of his question, right? So that means that you're signing this loan, and if you don't pay the loan, they got a personal guarantee, and they can obviously not just put a lien on your property, which they're going to put a lien on your property, but they can also go after you personally for the debt. And that's what destroys a lot of people financially, because anything can happen at any time, and then your whole financial kingdom comes down like a house of cards, because you signed to personally guarantee on this one asset. So that can be a problem. And then another thing that they want to have cash reserves. So you not only got to have good credit, good income, but a lot of times, especially on hard money loans and business type loans, they want to see that you've got a bunch of money sitting in the bank, right? So it's kind of a catch-22, right? It's kind of like, well, if I had a whole bunch of money in the bank, maybe I wouldn't need to borrow the money, right? So that's kind of tricky. So these are a bunch of hoops that people have to jump through, hoops and red tape. And now, one thing, also business credit, I don't know if Sydney was actually dealing with business credit, but with business credit, a lot of times I've seen things out there where they say, oh, you can get this business credit, no personal guarantee, and yada, yada, yada. But every time I've looked into it, actually I've got a course on. I didn't write the course, but I bought somebody's course on business credit. There's always some kind of catch. There's always some kind of catch with the business credit. Now, if you've had a different experience with business credit, please let me know in the comments. Please let me know in the comments, because I'd be curious to find out, you know, what kind of problems you run into with business credit. But basically, the bottom line is, I don't want my business to be dependent on me having to ask somebody to borrow their money. All right, I don't even want to be in a business that's dependent on that, because I've learned, you know, there's other ways to make money without having to be dependent on somebody else. So now remember, if you're a real estate investor, or you want to be a real estate investor, then the end goal is not to get funding, right? The end goal is to do deals. So we want to be doing deals, and we want to be buying houses that we can quickly convert to cash or to residual income through cash flow. All right. So that's our end goal. So bottom line, don't get tripped up on funding. All right. Bump funding. All right. So you want to, you know, a lot of people get stuck on this imaginary obstacle, which it doesn't have to be an obstacle. All right. So when you're dependent on funding and asking a bank for funding, you're trapped, right? You're at the mercy of somebody else and their opinion of you, their opinion of your credit score, their opinion of your job history, and all that stuff. So that becomes an excuse not to succeed, because, oh, I can't get funding. All right. So bump funding. How about we design a business that doesn't depend on outside funding, right? So basically, always buy property as if I'm broke, because guess what? If I'm broke, I've never had to worry about going out of business, all right? Because I didn't depend on funding in the first place. And when you really think about it, rich people don't depend on their own money, right? They're always they're finding ways to work with somebody else's money, all right? So that's what I'm going to talk about here. So you don't need funding. What you need is the knowledge to create a business that doesn't require funding. And that's what I've done. And that's what I want everybody who hears me to be in a position to do, even if this even goes beyond real estate. But specifically, since I'm a real estate expert, that's what I'm going to talk about. All right. But the bottom line is, you know, we live in the United States of America. Thank God for that. And, you know, there are so many ways. And even now with the internet, a lot of opportunities that were only afforded to Americans before are afforded to everybody, because the internet has become the great equalizer. All right, the great equalizer. So people in developing countries can learn how to make money without having a lot of money. So if you don't know anything about real estate, whoever you are and listen to me today, there's one thing I want you to understand. The thing about it takes money to make money is not true. It takes money to make money. That was said by somebody who didn't know any better. All right. What it takes to make money is knowledge. All right. It takes knowledge, and you have the right knowledge, then you can survive in any free market economy. All right. You can survive and thrive, become wealthy, rich, and fulfill all your financial desires in any free market economy. Okay. So this thing about it takes money to make money, bump that. All right. What it takes is knowledge. All right. And I'm going to prove that to you. All right. So, so I don't want you to be trapped. I don't want you to be at anybody's mercy. I want you to be in a position to take control of your own financial future. All right. Now, so let's talk about the 5 ways that I buy houses. Okay. The 5 ways that I invest in real estate. So number 1 is private lenders. All right. So I'm going to go ahead and talk about this. This is not my favorite method. All right. And it's not my favorite method, but I've done this a lot. So first of all, we talked about the world of institutional lending, right, where they have you jump through all these hoops. So another way to do that is to skip institutional lenders and work with private lenders. So private lenders are private individuals. They are not in the business of loaning money. All right, I want to make that clear. They're not people that are in the business of loaning money. They're professionals. Usually they're busy professionals, okay, that have some money that's sitting at the bank. Now, if you're watching this video, what are banks paying for interest? People are putting trillions of dollars in 5-year CDs that are paying embarrassingly low interest rates. All right. So so that's a good portion of people in America that have a lot of money. Right. So they've got this money that's at, I think Chase is right now at the time of this video, I think is paying like 0.2%. All right, so we're talking way less than 1% interest. All right, so and there's trillions of dollars. You know, very wealthy people have money in these 5-year CDs. Very wealthy people, or just busy professionals, like I said, doctors, attorneys, engineers, anybody that's making a decent wage. You know, it doesn't have to be even a professional person. It could be, you know, that just comes to mind the guy that was working as a trash collector in Detroit. You know, he saved up money just to send kids to college, you know, from his salary as a trash collector. But so it's just basically anybody that has managed their money and has been able to put money aside, and they would like to do something. They would like to do something profitable with that money. So those types of people have loaned me money to buy property, and I can pay them several times what they can get at the bank. Okay, so it's a win-win for them. So people will drive across town to get, you know, a fraction of a percentage point higher rate on their CD, when I can pay them several times that to buy real estate. Okay, so it's a super win-win. So we can work out terms that are going to allow me to be profitable and allow them, you know, I can pay them, you know, several times what they're making at their bank. So it's not even a competition. And for that also, the loan is collateralized, right? So I'm buying properties at huge discounts, right? 50% discounts, 60% discounts, 70% discounts. Okay, so their money is very, very protected, and they have a lien against my property, right? So God forbid something were to happen, if I didn't pay them, they have a lien against my property. They could take my property. So they have total legal protection. They're getting insurance against the property in the case of a loss of a fire or something like that. So, you know, they're pretty much in a very difficult to lose situation, very low risk situation. And they're getting, rewarded a lot for the interest relative to what they could get at the bank. All right. So that's private lenders. Now, I don't recommend that new investors who don't know what they're doing go out and start borrowing people's money as for private lenders. That's something that you want to get to later on after you've established yourself and your knowledge in the area of real estate investing. All right. Hi, Chenier. Hello. How are you? And thanks for giving me a shout out. And again, if you're joining the video, give me a shout out. Give me a hashtag replay or hashtag live. If you're, depending on at what point you're looking at this. All right. So private lenders. So again, that's one way. And I just wanted to mention that for completeness when we're talking about lending, or borrowing money. But again, that's not a strategy that I want you to use if you're a new investor. Okay. Because, you're borrowing people's savings. And even still, even if you're an expert like me, I don't want you borrowing anybody's life savings. All right. I don't want you doing that. So we always want to, make sure that everybody's in a very safe position, and the money that I borrow from people is money that they can afford to lose. All right. So money that they can afford to lose, as that should be with any investment, right? You shouldn't be investing in anything, whether it's the stock market, cryptocurrency, real estate, whatever. You should never invest money that you can't afford to lose. Okay. Especially as a passive investor. Now let's talk about my four favorite ways to buy property. So number one is wholesaling. So, and first of all, if I'm going to borrow a property, if I'm going to borrow money before I leave that private lending, if I'm borrowing money for private lending, it's going to be either because I'm going to fix it and flip it, or because I'm going to keep it as a rental property. Okay. So usually I'm doing 5-year terms with my private lenders. So it's money that they're not going to need for 5 years, right? Because I'm looking at money that they would normally put into a 5-year CD. Okay. Or it could be somebody that has an IRA. Maybe from an old job that they're not using. Okay, so I can show them how they can use that money and use it as a real estate loan to loan it to an investor like myself. Or it could be, so I said an IRA or a 401k, right? 401k from an old job. I think I said IRA before, but I meant 401k. So 401k from an old job. It can't be a 401k from their current job. All right, can't be a 401k for their current job. But if it's a 401k from a job that they left or retired from, that money can be put into a self-directed IRA account, and then I can show them how they can use that self-directed IRA to loan money on real estate. Okay. or to do their own real estate investing also. But if they want to be a passive investor and just collect money on interest, then I can show them how to do that. Okay. So now let's move on to again. So that was private lending. So all right, so we're off of that now. So we're on to wholesaling. So wholesaling. We're not off private lending. We're not off private lending. So again, I'm going to use money for private lending if I'm going to do a fix and flip, or if I'm going to keep it as a long-term rental property. Okay. Because the long-term rental property, you need rates that are low enough for the property to cash flow. Okay. So I don't advocate people going out here and borrowing money at exorbitant interest rates. Definitely not for long-term rentals. That doesn't make any sense. Okay. All right. So now let's talk about wholesaling. So wholesaling is kind of the opposite of fixing and flipping, right? So wholesaling is flipping without fixing, right? So I can buy a property and I can sell it. Usually I'm doing this, I'm buying it and selling it on the same day. I mean, I'm closing 2 transactions at the same time where I'm buying it and selling it, right? So in that situation, I don't need funding because my funding is coming from my buyer, right? So let's just say that I'm buying a house that it would be worth now the properties usually are in disrepair, but they don't have to be. Okay, so let's say that I'm buying a property that would be worth $200,000 after it's fixed up. Okay, and let's say that and it needs about $30,000 worth of repairs. Okay, so let's say that I'm buying this. I've got a contract to buy this property for say $120,000. Okay, so now I can sell this contract for that I've got it under contract for $120,000. I can sell the contract to another investor and maybe collect $10,000 or $20,000, okay, up front, right? So no money out of my pocket. I'm collecting $10,000 or $20,000 because I have found an undervalued asset. Okay, so that's the whole key. I found an undervalued asset, and then I can sell that asset and make, $3,000, $5,000, $10,000, $20,000 the same day that I buy the property. Okay, and then I'm out of the, I'm done. All right, I get in, I get out, I get paid. Okay, so that's wholesaling. All right, so there's a lot of people teaching wholesaling because it's a very simple concept to understand. I have a wholesaling course also. So, but a lot of people are teaching that. There's a lot of HGTV and all that stuff. So everybody's on fixing and flipping, and now there's a lot of gurus teaching about wholesaling because it's a simple concept to understand. But the important thing is that you have an undervalued asset. So if you have an undervalued asset, then you can sell it. You can sell it to somebody else. You can find somebody that's willing to pay you a higher price. You're not selling it at top dollar. Remember, I said this property would be worth $200,000 after it gets fixed up. All right. So let's just look at some numbers. So $200,000, the person that's gonna and it needs $30,000 in repairs, right? So 200 minus 30, that takes us to 170. Right? So I've got it under contract for 120. So if I got it under contract for 120 and I sell it to somebody else, I make $10,000. That's 130. So the difference between that 130 and that 170, that's $40,000. So that means the guy that bought it from me is making 40,000. I'm only making 10. And I'm happy with that because I don't have to do any work, right? He's doing all the fix-up work. He's hiring the contractors, or he's out there working on the property himself. Okay? So now, so the question is, the point is, I'm not so greedy that I have to. Now, if I don't sell it to him, how much would I make? He's making 40, I'm making 10. That means I would make 50. Okay? So if I want to go ahead and put the work in and deal with these contractors or get out there and fix it myself, that's never going to happen. I'm not going to do the work myself. All right? So I can make 50 grand, right? Or I can make $10,000 today, right? So I've done a lot of rehabs and fix and flips. So, and if I'm going to do that, there's got to be a lot of money on the table for, actually, probably a lot more money on the table, or there's got to be a great incentive for me to go through that hassle, right? Especially when I can make $10,000 right now. All right. Anyway, so that's wholesaling. Now let's talk about lease options. So lease options is another way. I don't need funding. All right. So I'm going to get a house. I'm going to lease a house, and then I'm going to sublease the house to somebody else. So this is a way that I can build up residual income, and so I'm making money up front from from the person that I'm subleasing to. They're going to give me kind of like a down payment. We call it a non-refundable option consideration. All right, I got screens popping up here from other Facebook activity. All right. So, yeah, so we'll call that non-refundable option consideration. Okay, so that's what I'm going to collect from the person that I sublease it to. And, all right, I see 𝗪𝗂𝗧𝗂𝗧 just asked, would you suggest hard money? What are the pros and cons? All right, I did talk about hard money, and I talked about the pros and cons. So when you watch the replay, you could go back to that. That was at the beginning. All right. So, but anyway, so lease options, right? So I'm collecting non-refundable option consideration from this person that I'm going to sublease it to. It's called a tenant buyer. All right. So remember, this is a house that I don't own. All right. I don't own this house. I'm leasing it and I'm subleasing it. All right. Another word for that is sandwich leasing. So I'm leasing it from one party and then I'm subleasing it to another party. I'm the guy in the middle. That's called sandwich. That's why it's called a sandwich, right? So I'm like the peanut butter and the jelly, and the person I'm leasing it from is like is one side of the bread, and the person I'm leasing it to is the other side of the bread. All right. So I'm coming in like a tenant, but I'm controlling the property as if I'm the owner. Okay. So I'm collecting non-refundable option consideration. I'm paying my seller one amount of rent, a lower amount of rent, and I'm collecting a higher amount of rent from my tenant buyer. All right. Also, from my seller, I have a price that I can buy it from them, and then I have another price that I can buy it from. I'm selling it to my tenant buyer at a higher price, right? So I'm making money three ways. Okay, so actually this method and the next two methods I'm going to cover, there's three ways that I'm making money on the deal. So I have three profit centers on most of the deals that I do, unless I'm doing a wholesaling or fix and flip, right? Which those are only two ways, right? So if I'm doing wholesaling, I'm making money right now, today I'm done. If I'm doing a fix and flip, I make money one time, I'm done. The rest of these deals, I'm making money with three different profit centers, all right? So again, no money out of my pockets, all right? Never any money out of my pocket. So again, what I say about funding, bump funding, you need to change your mentality about funding. You don't need funding. And if you do need funding, then you need to learn how to cultivate private lenders, okay, which I can teach you, obviously. All right, so you need to learn how to cultivate private lenders so you don't have to deal with banks and hard money and all that crap. All right, now, taking over payments. So for seller, most people that have a mortgage on their property, all right, they get in a situation, they can't pay their mortgage anymore, or they need to move, they have two houses, maybe they've already moved, okay, I can come in and take over their payments, right? So I don't need to get a new loan because they already have a loan on the property, right? So I just take over their loan that they have on the property and just continue making payments wherever they left off, right? I just take over those payments, and again, the payments have to be low enough so that I can rent the house out and make a monthly payment spread, ideally. And again, I'm going to, go through the same process. I'm going to collect money up front from my tenant buyer, and I'm going to sell it to them at a higher price than I bought it from the seller from. All right. So again, I'm making money three ways on those deals. All right. So that's called getting the deed or taking over payments. And then the last thing is seller financing. So seller financing is it's kind of like I can negotiate whatever kind of deal I want with the seller. Okay, I can negotiate whatever kind of deal I want with the seller that the seller will agree to. So again, none of these deals is any money coming out of my pocket up front or at any time. Okay. Now, if the deal is juicy enough, I could possibly come up with some money on a seller financing deal or lease option deal, but I wouldn't come up with any money on a lease option deal. But on a seller financing deal or taking over a payments deal, if there's a huge amount of equity in the deal, I might be tempted to come up with some money. But typically, I'm going to use my brain and my intellect and my knowledge and my skill so that I don't have to come up with any money, right? So I can always substitute my knowledge and my skill for cash, right? And that's the position I want you to be in, where you could just substitute your knowledge and your skill for cash, right? Now, so seller financing. So one type of seller financing that's known in Ohio is called land contract. In other states it may be called agreement for deed or contract for deed. Like in Florida and Georgia, they have different names down there in some of these other states. And in some states they use those names and they also use land contract also. So it could be a land contract. So a land contract is kind of like buying a car, right? You buy the property from the seller. So it's basically in seller financing, instead of me going to the bank to get a loan, the seller is going to become my bank. All right. So I'm going to work out everything with them, what the payments are going to be, what the monthly payments are going to be, what the price is going to be, what the down payment is going to be, which in my case is usually going to be 0. Okay, so all that's worked out between me and the seller. I don't need to go to the bank. I don't need to go ask Chase. I don't need to jump through their hoops. I don't need to cut their red tape and all that crap. All right, so so I can make payments. I can make payment arrangements with the seller, based on what their needs are. But again, it's got to be win-win for me. It's got to be win-win for the seller. Okay, so if the deal doesn't work for both of us, there's no, it's not going to happen. All right. I want the seller to be able to sleep at night, and I have to be able to make some money. All right. Because if I can't make money, then I don't have any money to finance my dreams and to be able to have a positive impact on other people's lives. Right. So, but yeah, so seller financing, so the seller's going to become my bank. So that might come in the form of a mortgage. All right. Where I'm going to take a mortgage on the property, could come in the form of a land contract. And so yeah, it's just all wide open. I can let's say that just for the sake of discussion, let's say the seller wanted a down payment and I was willing to give him one. All right, and let's say the down payment was going to be, let's just say $9,000. Okay, because it's seller financing. So if the bank tells me they need $9,000 down, guess what? I got to have that $9,000 right now. All right. But let me give you an example of seller financing. Let's say they want $9,000. I could say, okay, I'm going to give you $3,000 now. And then 6 months from now, I'll give you another $3,000. And then 6 months from there, I'll give you another. So in a year from now, I'll give you the final $3,000, right? So I can break up the down payment into phases, all right? You can't do that with Chase Bank, all right? You can't do that with Huntington, all right? But you can do that with the seller because it's just whatever you guys agree to, all right? So, so you guys let me know in the comments, does this make sense? Does this sound better than going to the bank and begging them and having to give your blood sample and sign away your firstborn and and all that crap, all right? Just to beg somebody for money, So again, I want you to be in a position where you don't have to beg anybody for money, but you can create money with your knowledge and with your skill and with your abilities, okay, with your intellect, okay. So let me know if you guys have any questions. I'm looking at the questions and comments now. Again, if you like the video, show me some love, give me a heart. Whether you're looking at this on Facebook or YouTube, give me a thumbs up, give me some comments. Tell me what your main takeaway was from the video, and what parts you understood best. Did the private lenders part make sense, or did you resonate more with the wholesaling, the lease options, the taking over the payments, or the seller financing? Okay. Let me know all of that stuff. So again, Jamal, as far as the hard money, yeah, like I said, I covered that at the beginning of the video, so you can go back and look at that. And all right, I'm gonna give you guys a couple seconds, a minute or so. Let me know if there's any questions. Got any questions? Sydney, if you're still there, you can give me a follow-up if I didn't answer your question, or there's some part that I missed, and I'll definitely go over that. All right. You can check out, if you want a more in-depth coverage of how to do a real estate investing without cash or credit from A to Z. You can check out I got a 90-minute training video where I go down through all the steps. I've even got a conversation with me, negotiating with the seller on the phone. That's at realestateCashflowSecrets.com. realestateCashflowSecrets.com. It's a free training. Normally would be $297, but I'm offering it for free for a limited time. You can join my Facebook group, Real Estate Cash Flow Secrets Official is the name of the group, Real Estate Cash Flow Secrets Official. You can join my free Facebook group. There's no charge for that. You can check out my YouTube channel, Todd Smith Real Estate Investing. Again, Todd Smith Real Estate Investing on YouTube. All right. Thanks for listening. May all your parents have rich children, and may all your children have rich parents. Thanks so much, guys. Have a blessed day.